Hey, it's Elaine. This is episode 317 of the Orange Pill Investor. Um, yesterday was a quick session. Today probably will be as well. And I'll probably have to re-upload yesterday's because I accidentally captured a phone call on speaker. So I'll have to edit that one. See if I can edit it out. I didn't do much anyway. And unfortunately, the market went so quickly today that I missed. I was going to put on some more covered calls today. I was like, "Oh, cool. We're, back up to 317." So I was going to be able to sell these 317.50s or 320s for about 8 or 900, maybe even 1,000. And now I can only get that on the 310 strike. Um, I've got shiz to do today, so I would love to just kind of sit and watch this all day, and if it gets back up to 315 or 325, or, maybe just add in covered calls as the day goes along, if it does continue to go back up. But, maybe I will just talk for a minute and see if this little 305 was the temporary bottom. And I could have put these on yesterday. It probably would have amounted to about the same thing, except, if I do it now. Um, and I would have been more than happy to just bag hold and wait for the price to come back up a bit, maybe tomorrow. However, we got to go close a deal on a a wheelchair mobility conversion vehicle. And so yesterday, while I made sure that I had no margin, right? $79 in margin. Now I'm about to need 20 grand. So I submitted a withdrawal. I'm gonna have to put like 20 grand down on this thing. And so now I need to come up with 20 grand. And I will probably have to go ahead and sell some covered calls. And it looks like, while I've been running my suck, the price has come back $5. Now that's just pure luck to you know, that it didn't go down to 290 or whatever while I'm sitting here yapping. But let me go ahead and place however many trades I need to place in order to not be using any more margin. I'm leaning towards the weeklies for a couple of reasons. One is that earnings is coming up, and there could be some anticipation. Maybe the stock gets bid up before earnings. Maybe there's a blackout period where, it seemed like Sailor was the ratio of at the market, part of the 21 billion plan is like way further along than the convertible bonds. So maybe we will see a lot more, convertible bond activity versus the at the market. And that might be just perfect timing with the blackout period. Like, he's done all of his ATMing he can do, and he got his last announcement. He got his last announcement on Monday for 2024. So, um, I don't know. Does the blackout period start now? And we'll see, the price bid up to January 17th. I know there's a lot of hype about January 17th being a historic expiration, but we kind of thought that QQQ was going to be historic, but it seemed like the market sniffed that out and it was all front run. And we got all of the QQQ inclusion before inclusion, and that was kind of a letdown. So I'm not saying these catalysts don't matter, but the timing of them isn't necessarily promised or guaranteed. Like, just because January 17th is historic, tons of in the money calls, will we get a cover squeeze? Um, Bitcoin, not crypto, did cover that. There, if the markets are not fully hedged, maybe they have to go out to the market and buy some shares. I'm not banking on that happening, but it'd be cool if it does. The point being, I'm not inclined to sell 45 days to expiration. I usually sell either weeklies or 45 days, and I'm inclined not to go beyond a week because I do kind of want to take my foot off the gas for selling covered calls and just wait to see. I don't mind bag holding for a couple of weeks, not collecting any covered call premium, and just wait and see. Maybe January 17th is completely hedged and the market makers will just be like, fine, exercise your calls. We don't give a shit. We already own the shares. I was wondering about this though. When you sell to close, like let's just say you have to sell to close one in order to be able to afford to exercise the other. If that call was fully hedged, then that means they own shares. And then if you sell to close, now not only do they not have to give you those shares, but now they're going to unhedge and sell them. So could we get the opposite effect for January 17th? I don't know. But that's kind of the whole point of option selling is being completely agnostic about the price and just reacting to the market. Like how much option premium can I get? And every time I do, I'm lowering my cost basis, which makes it easier for me to succeed in the long run. Maybe I shave off some max profits. Um, but anyway, as I'm talking, I think I could have sold the 312s, but now I'm probably going to have to sell the 310s. Anyway, let's just get this trade done before it does crash to fucking 290. Um, in order for me to come up with 20 grand, I'm going to have to sell 20 of these, right? Approximately, maybe 19 at this price. Yeah, let's you know what, just sell a full lot. There we go, 20. Check the volume. All right. That gives me 500 in cash. That's probably fine. Could buy a share, I suppose, just to make sure that I have no cash whatsoever in this account. That's fine. 500 bucks is no big deal. Kanal, good morning. Says starting to think that a lot of the catalysts on MSTR Moon won't be catalysts for that exact reason. Yeah. I mean, I still think they're catalysts, but I think maybe that we're overplaying the timing of them. Like, oh, okay, QQQ is a catalyst. Of course, it's going to be a catalyst for the next 10 or 20 years. Does that mean the price should be $1,000 a share now? Maybe not necessarily. Um, but and and the market could do a play a trick on me. And if I place the SPY, if I assume that the SPY plays out like the QQQs, then maybe um, if the SPY gets included, then do I take some profits? I think my main trading metric is probably going to be IV rank right here, especially since I have a lot of options. It's necessarily going to correlate with the price, but um, MicroStrategy's implied vol is going to have a major effect on those options prices. So I can't imagine that I'll be taking any profits in my share positions. Like I intend to only add to this share position in 2025. But absolutely, a bunch of this long leverage. So all of these Aprils, all these Junes, these Decembers, and these Januaries, these will all be gone by end of 2025. They will be either converted to MicroStrategy shares or Tesla. I'll probably have two positions in my portfolio end of 2025, MSTR and Tesla. And I'll be, my basic assumption is that the 4-year cycle will continue. So I'll be selling covered calls heavily against MicroStrategy. But of course, the market could take a dump on me and decide that the 4-year cycles are over and it's Bitcoin go up forever. And, maybe my covered calls get wrecked. That'll be fine. If we get to if we get to 200,000 a share or a coin Bitcoin, and then the price just never goes down, yeah, I'll be perfectly fine with my MicroStrategy shares getting called away at astronomical numbers. That would be perfectly fine with me. Um, I'll talk quickly about this column that I added over here, theta. Ah, damn it, it's too big. Tom Sosnoff's had a seminar, and he was saying that theta should be targeted at approximately 0.1 to 0.3% of your, you know, net liquid portfolio. And so I am definitely a little bit, well, actually with today's theta, I might be okay now. Let me calculate this in my head. Yeah, this actually is pretty appropriate. Before I added this 3,000 3,000 theta, I was actually negative theta, meaning all of these long calls, like these Decembers, good lord, um, you know, these these options contracts are decaying every single day. The Junes are decaying. The Aprils are decaying. So for an option seller, I need to be selling enough options premium to not only counteract all of that decay, but actually be adding some extra premium in my pocket. So on a $10,000 account, that works out to what? Move the decimal place over 3. So that would be like $10 a day of theta. $100,000 account would be 10 times that much, maybe $100 worth of theta decay per day. The assumption would be that you're only probably going to collect about half of it. And that works out to probably like 15 to 25% annual returns. Um, but that's coming from a TradFi investor, and he's being very, I think, modest or conservative with those expectations. I trade more volatile stocks, so I think I have a reasonable expectation to a little bit more premium than that. But I also have to deal with my my account going up, 4x and then dropping 50% in a month. So you have to be able to stomach that kind of volatility in order to be able to collect premiums that high. I noticed some people that were selling puts, they were complaining that they were selling puts in MSTU and MSTX, and even selling like 50% out of the money puts at $40 a share when the price was $60 a share. Like they're all getting wrecked. Um, and so those, MicroStrategy is volatile enough, and leveraged vol on vol is pretty intense. I think they'll be all right in the long run, but yeah, there's some short term pain that I think some of these guys are dealing with. So I'm gonna check chats real quick. Actually, let me just check my other account. The IRA. Whoops. Yeah. See, this account, I have so few covered calls on that my theta is negative, meaning my account value is decaying. I would need to probably add one more covered call. How many do I have on though? I've got this one weekly, which not much value in it. I should probably take this off or roll it down. Hmm. I did add, oh, so there's nothing left in these. That's the problem. What's my balance? 80 bucks. So there's no point in having these on if there's nothing left to collect. But I don't have enough cash to even close them and wait. So let me add a covered call for this week. I'll just do the same thing. Let me sell. Let me sell like 315. I think that'll get me enough to close these out. So yeah, I've got 5 covered calls on here. They're not even collecting me any money. Like this is collecting $50 over the next 17 days is not worth having. So let me close all of these bad boys. All right, my theta is positive now. So at least I'm gaining some money on more money is draining into my account on the covered calls that I have on versus the money that's draining out of my account because I have this long call exposure. So that definitely needed a tweak. But this other one, this 335, there's not a lot left in this one either. So let's close it. All right, 250 bucks. That is less than one share. Um, my theta is negative again. So maybe I will sell one more covered call at the money or close to it. All right, now I've got some positive theta that I'm collecting, and I've got $900 to play with, so I can buy 3 shares. Or I could try to dollar cost average into any long calls that I have that are not ridiculously short dated. Yeah, I can't quite afford to get into this one unless I sell another share. Hmm, let's do that. So instead of buying 3 shares, I will sell one, and then I can afford a June 1080. And that is not me predicting that the price of MicroStrategy will be 1080 by June. It just means that I'm expecting for some type of movement Like, I only need a rapid movement to 650 or 700 in order to be able to sell this 1080 at a profit from today's prices. It may still be a loser based on the 5 grand that I paid for the other one, but let's see here. June, top of the chain, buy. Why do I still have shares? Okay. All right, 20 bucks is 20 bucks. The joint account, again, I've got negative theta here, which means that my account is decaying more than it's collecting. But what's my total delta position? I've got 348 delta, which means I could potentially sell up to 3 covered calls based on my long call exposure. This one is not collecting too much. And neither is this one. So let's close it, which is going to make my theta even less. What did I just do? Okay, I thought that cost me 4 grand for some reason. Okay, so now my theta is even more negative. I don't necessarily like this February 7th. And I can close it for half of what I sold it for. So I'm going to close that. And now my theta decay is going to be even worse, 140. So let's go back to the well and sell another weekly for January. Let's see if this gives me some positive. Whoops. Why am I trying to buy something? Your account does not have sufficient buying power. This order, please deposit funds. Supposedly, this is going to reduce my buying power by 6 grand. All right, that's confusing to me. Let's figure out why that would be. I wonder if they're oh, probably because none of these long calls that I have are in the money. That's unfortunate. So I might need oh, but why did it let me? Oh, because I'm trying to sell them. All right. Interesting. I probably need to sell above my long call price. Hmm. Or buy 13 shares. Let's see what happens. Damn, the price crashed on me again. Now I can only get 700 for the what the shit? Try this one more time. So sell MicroStrategy option. Okay. Maybe I had the shares highlighted or something and it was trying to buy 100 shares along with it. I don't know what the hell I was doing wrong. Maybe I'll rewatch it and see what I was screwing up. But that gives me just barely a little bit of positive theta. Probably too small for this account, but that'll have to do for now. This one is also negative theta, but I don't think I can do much with this one unless I roll this out, which I'm not really inclined to do. Or am I? So I already have the 38 days to expiration. I would normally roll to 45 days, especially on a Tuesday, but there's no February 14th date, so I'd have to go to February 21st. I could roll this down, I suppose, but I'd like to. Oh, you know what? What's my cash balance in this account? Oh, that doesn't work. Okay, I got theta positive, but I have 4,000 in margin and don't like that one bit. So I can take some small profits here on this December 19th, 530s, or what's the best tax thing to do? I could take I could actually take some losses here. That's only going to give me 1,200 bucks. All right, and 2,700 is basically this contract right here. Not terribly happy about that. I forget what the trade prices was on these, but this one might have been break even, and these were definitely big losers. But we'll call that tax loss harvesting. I don't know, but does keep me within my no margin use goal. All right, 280 bucks. I got negative theta here, but probably won't be able to do anything about this because the price has been kind of going against me. So I think I'm just going to leave that be. And let's take a look at the 5K account real quick. Time left on all of these. MicroStrategy. I've got the February 7th call against this call. This 450 call is way underwater now. It's kind of hard to sell covered calls against it. So there's probably not a whole lot I can do with this one. Should I close it? For about half of what I paid for it. Let's go ahead and do that. That's in keeping with the philosophy. All right, gonna have to pay a little more for it. Let's do 7.1. And let's check my margin use. I think it's probably still pretty small. Yeah, says low risk. If I was terribly worried about it, I could peel off like 100 shares of either of these. That would probably do it. But I could also, yeah, that's probably that's probably good for now. All right, I'll do a quick chat check and then I gotta call it so we can go buy a car. Scott, good morning back to you. iBill says conspiratorial take. Market makers have been driving the price to ensure 117 2025 was a non-event, including breaking sentiment. Catalysts work in the opposite direction too. Yeah, they could. Yeah, I don't know how much they can control, but to the extent that they can, I'm sure they've got a plan. Uh, then says ATM shorting FUD and price action all self-reinforce in the downward direction would make for a good covered call selling environment. Um, I hope not. This probably is true. Um, I do sell covered calls, but I always hope that they get wrecked to the upside because that's how I can make the most money. Scott says, been thinking that way as well. iBills, market makers have clearly been chasing the easy liquidity, been tracking that for weeks now. Danimal says, Happy New Year, bro. Here's to escape velocity in 2025. Uh, right back at you. Can't wait. Scott says, I think we are running out of down. Been tracking volume lowering for since mid November. Down looks like it might be running out of steam. I hope so. Losing streaks. Have you tried wheeling ATM on ES and NQ daily? The premium is juicy. I'm not sure about what those are. Sepal, what is the meaning of the option gets called away? In Europe, we just have cash options, and the US options are different. Yeah, so in Europe, the buyer of the option cannot exercise it prior to expiration. Um, yeah, and you guys just settle up with cash, I guess. But for the United States, as soon as I sell that call, at any point in time, the buyer has control of those 100 shares. They can exercise that day, anytime before expiration, they can just say, "Yeah, I wanna buy those shares at that price." And then as soon as they say they wanna exercise the contract, they own your shares. And, um, generally, that doesn't happen before expiration because if you do that, you lose all of the extrinsic time decay value in the option. So exercising early does generally lose that person money. So if they are gonna exercise, it's usually, like, the day of or the day before expiration. Um, I think I've only had them exercise on me early once, and it was, like, the day before. Oh, Scott says it means that 100 shares per contract go to the new owner if the call option is exercised. Exactly. What's up, Junkrat? He says, "Hope you're good, dude. Got a song you might like to vibe with in the next episode." Alright, I'll check it out. And then Sepple says, "Okay, thank you very much. In Europe, we don't have that kind of option. We just sell the premium." Yeah, that's exactly right. All right, cool. I appreciate everybody checking in, and I gotta run, and we'll be driving home a new car, and it'll be wheelchair accessible, and yeah, life's good. All right, be good, y'all.